Greetings to everyone. I hope you are all fine. This will be our final session on lectures for taxation, which is going to cover tax revenue administration. And this is a very broad topic, very broad. It has about 56 slides. So far, I think this is the lecture that has the highest number of slides here, and it is very broad. So I'm going to take my time and then also go through this. So I think this video might be a bit longer than those that I've done in previous. So let's quickly run through. If you've not liked this video, kindly like it and also subscribe to my channel for more. All right. So by the end of this session, we should be able to operationalize the requirements of the Income Tax Act 2015. Also, we should be able to identify changes in tax revenue administration, and we should be able to implement changes in tax administration and also enforce the income of tax laws of Ghana. So our key topics in this session is revenue administration and also penalty and offenses, where revenue administration covers majority of these slides, right? So we are going to do read it. There's some reading list. All right, so we begin with revenue administration. So starting with the revenue authority, tax administration is the responsibility of the GRA via the Commissioner General. Only tax officers at the rank of senior revenue officer and above can be delegated to enforce tax laws. Tax officers shall be issued with picture ID cards to identify them. So if someone comes to your office and you say it's from a GRA and then it's not having any ID card, then you can request for it. If in case he doesn't, you have the right not to mind him. All right, so expect may be engaged by GRA to assist in the proper performance of its function, right? And the assistance of officers of other public bodies may be requested to assist GRA. There can be official secrecy or acceptance of scrutiny. So now we are coming to talk about the taxpayer. So the taxpayer, this session includes the revenue administration. So the revenue administration is like a gradual process that is designed to ensure efficient tax collection, compliance, and enforcement, right? So we are coming to talk about who a taxpayer is, the identification of a taxpayer, a tax clearance certificate, cancellation of TIN and TCC. TCC is the tax clearance certificate, and also right to information and a right to representation. So we begin with the identification of taxpayer. So this ensures that, remember that a taxpayer is a person who is liable to pay tax, right? So this ensures that all potential taxpayers are brought into the tax net. So everyone under the who is qualified to be a taxpayer is brought under the tax net. So this method includes the registration of businesses with the Registrar General Department, collaborating with other governmental agencies and institutions, and also data mining and third-party information sharing, and last but not the least, public awareness campaigns to engage voluntary compliance. We move on to the tax identification number. So which is also known as the TIN, right? The TIN is a unique identifier which is assigned to every taxpayer in Ghana. So once you are a taxpayer, you are assigned by this TIN. And the TIN serves as tracking mechanism for tax compliance, and it is required for various transactions. So we need the TIN to open a bank account, to clear goods, filing returns, registering lands and property, and applying for governmental contracts, right? Now, let's talk about the tax clearance certificate. if you've watched the previous tutorial session before this video, you see I explained what a tax clearance certificate is there. And I said that this is a document that is issued by the GRA to confirm that a taxpayer has fulfilled their tax obligation for a specified period of time, right? So the requirements for this tax clearance certificates include participating in government tenders. Sorry, it is required for participating in government tenders, renewing business licenses or permits, obtaining visas or travel documents, and also conducting certain financial or legal obligations. So when will the GRA cancel your TIN or your TCC, right? So the GRA has authority to cancel the TIN and TCC, right? If you, the taxpayer, has provided wrong information, and when you are dealing with fraudulent activities, and when you fail to comply with the with tax obligations, right? Or when a business ceases operation, right? This will cause the GRA to cancel your TIN and tax clearance certificates. Then let's move to right to information. So right to information here is that the taxpayer has right to access information about their tax obligation and tax responsibilities, right? So this includes accessing tax records and also account statements and tax laws and policies and procedures where there have been some changes. If there have been some changes, the taxpayer has right to know the changes and the likes. And also the taxpayer has right to be represented, right? So the GRA has approved the has approved tax consultants, lawyers, and then some accountants to represent clients in the case of filing tax returns, responding to queries, and also represent the taxpayer in the case of what a dispute. Right. Let's talk about, so only an approved tax consultant may represent a taxpayer, provide tax advice, or prepare tax returns, or appeal, or other documents. Tax consultant may be required to register or deregister for such purposes. Approved consultants may be required to submit reports to the Commissioner General. A lawyer may not be affected by the above. So in communicating and documentation, English is the official language for that. And also our official currency is the Ghana cedi. The Bank of Ghana interbank rate will be used to translate all foreign currency transactions on that date. On that date, the tax becomes due. GRA shall prescribe the forms, notices, and other documents for tax purposes. Defective documents shall be amended by GRA. A tax paper document is deemed served on GRA if hand delivered or posted and acknowledged by a stamp. So this thing will be handed over to a person. The document will be handed over to a person or a manager of the entity, or it's left at a posted. It's left at or posted to the registered address and also sent by registered mail. So now let's talk about electronic document system. So this is a situation where all documents are being made electronically or online, right? So when you go to the GRA website right now, you can see that you see some QR code saying that scan to file and those kind of stuff. So we have electronic filing of documents, electronic service of documents, electronic payment of taxes, then issuance of tax clearance certificates. And these are already implemented in a web-based accounting software by GRA. So let me see. The GRA. You go to the GRA website. You see it right now. You can see file to pay taxes here. Right? How come GRA website is showing 100 GRA website? How? All right. So um let's see why we didn't cancel this. So okay, let's end this one. When I choose on this on the code that's highlighting this, and then I click delete, take it out. Now let me get a clear screen. Uh-oh. So, so when you come here, you can see you can file almost everything online here. I'm not seeing the scan to file. Yesterday when I came here, I saw scan to file. Yes, so you see scan to file, you can scan and then file everything. So everything is being done electronically. That's what it means here. So that's what so let's talk about retention and provision of information. So this will include maintaining documents and provision of information. Yes, so maintaining documents. Necessary record must be maintained in the country. Digital records must be maintained in a way information can be extracted. Record must be maintained to provide information required by the law. Record must be maintained to accurately determine tax payable. Record must be maintained for at least 6 years. And the record include receipts, invoices, and vouchers, and also contracts. So what in the law, what the law is saying is that you have to what maintain records. And also your record must be accurate to determine your tax payable. And the record must be maintained for at least 6 years. So after 6 years, if you want to dispose, it's fine. But you have to keep those records for at least 6 years so that in case of any dispute, you can use it to defend yourself, right? So the provision of information. So we file tax returns duly assigned by a manager or a taxpayer, clearly stating it's accurate and complete. The Commissioner General may request a person to file tax returns earlier than the due date, right? So you can file, or the Commissioner General can let you file tax returns earlier than the due date if the person becomes bankrupt or is under liquidation. If the person is about to indefinitely leave the country, and if the person ceases operation in the country, and also if the person commits an offense under the law. So maybe you've committed an offense where you're about to be jailed or something. You have to file your taxes quick so that they will take their money, and if you go to jail, you go. Then there will be an assistance to prepare tax returns is permitted, but must be acknowledged in the return. So if someone is assisting you to prepare the tax returns, you have to what acknowledge person. So provision of information, they are still there. The Commissioner General may extend the time for filing tax returns. The request for extension must be in writing and must state the reason. Must be made before the due date for filing returns. The maximum extension period is 60 days. The Commissioner General may appoint another person to file a person's returns where the person fails to file returns. A return can only be corrected with the permission of the Commissioner General. So let's move to access to information and assets. The Commissioner General shall, for reasonable cost, have, without prior notice, full and free access to the premise, documents, and assets of a taxpayer. In the case of dwelling house or public premise between 6 a.m. to 6 p.m. or any time ordered by magistrate. In any other case, at all times. So they can seize documents. So seized documents can be kept for 6 months. Seized assets can be kept for 1 month. The Commissioner General can extend the seizure period to 12 months. But in the case of perishable goods, they're not sure they will sell it quick. So rights and obligation of the possessor, yeah. A possessor of documents, premise, or assets may request a tax officer to produce authorization for access. A tax officer can be denied access if he fails to produce authorization. Failure to grant access is an offense. The owner can make copies of seized documents. So when in case you are owing a tax and they've seized your documents, you can make copies before giving the original ones to the GRA. The GRA shall pay reasonable compensation for loss of seized items. So if the GRA sees your item and then it gets missing, the GRA will what? Pay reasonable compensation. It doesn't mean that the GRA will pay the actual item, right? Will pay a reasonable compensation if in case you pay your tax. Notice shall be given for such access by the Commissioner General. Now let's talk about revenue administration, the audit side. Tax audit may be conducted. The Commissioner General may select a person for a tax audit based on history of taxpayer regarding level of tax compliance, tax payable, class or nature of business, or random selection, or maybe other reasons. Notice will be given for any tax audit. A tax audit may be conducted for the purpose of more than one tax law, right? So these are all self-explanatory. That's what I'm trying to read them. Then let's move on to the primary tax liability. The primary tax liability talks about assessment, self-assessment, preemptive assessment, adjusted assessment, final assessment, and also notice of assessment will be issued to taxes. So let's talk about assessment. So assessment is basically talking about you assessing how much tax you are going to pay to the GRA, right? So the self-assessment is you, the taxpayer, assessing yourself, right, on how much tax liability you are going to pay. So you are going to file a returns by yourself. And this includes you identify your taxable income, the applicable rate, the tax due, and then and then we file the tax return and then pay that particular amount at the due date. So you, the taxpayer, you are going to file everything and then pay it. Then the preemptive assessment is a situation whereby the GRA things the GRA takes to secure, like they are like actions that the GRA takes to secure tax revenue in situations where they think that there will be some kind of risk of non-payment, right? So maybe when you are being suspected of, you the taxpayer has been suspected that you are about to leave the country, or you are about to go to jail, or you've commit some kind of um, actions that are against the law, right? That's when the GRA normally takes this preemptive assessment. Then adjusted assessment. Adjusted assessment is when the GRA reviews the self-assessment and makes changes. So after doing a self-assessment, the GRA will review that self-assessment and see if it is okay, and now say he needs to do some readjustment, right? That's when the adjusted assessment will come in. Then move on to the final assessment. So the final assessment is when all the adjustment has been done and everything is correct for the GRA, right? So this is a conclusive determination of a tax liability for a specific period. It is issued after reviews, audits, and dispute has been resolved. Then now the notice of assessment will be issued to taxpayers. So notice of assessment is a formal document issued by GRA to inform taxpayers of their assessed tax liability. It includes the type of tax, tax period, the tax amount due, the due date for payment, instructions for filing the tax, right? So now let's move to the dispute resolution. So this includes tax decision. So objection to a tax decision. So an objection will be entertained only when all import duties are paid. In the case when you are importing goods, if you've paid all your import duties, then objection will be entertained. Or you have been paid in the case of importation, or 30% of tax due has been paid in the case of other taxes. So the objection decision, the Commissioner General must within 60 days serve the taxpayer writ his decision on the objection. And that there is also an appeal against the objection. So a taxpayer can within 30 days appeal to court about his objection. Effect of the appeal. So an appeal does not negate the objection decision of the Commissioner General. Now let's move to payments and recovery of tax. So how you are going to pay the tax, and also how GRA is going to what? Recover if in case someone is not paying or is owing. So regular payment of tax, it includes regular payment of tax, recovery of tax from taxpayer, recovery from third parties, reduction and refund of tax. So it is explained. So regular payment of tax. So time of paying tax, it must be based on the date specified in the notice of assessment or law. Extension of time for payment. The Commissioner General may grant extension if requested in writing with good cause stated. The extension may not exceed 12 months. Manner of paying tax shall be prescribed by the Commissioner General. Then order of paying tax, it occurs when a taxpayer is liable for more than one tax under the law. So let's say if you are liable to pay more than one tax, then talk about the order of payment. So it shall be prescribed by the Commissioner General. Then let's talk about electronic tax accounts. So the Commissioner General may establish and operate an electronic system of taxpayer tax account. That's what I guess, the electronic one. It may be separate or part of the electronic document system. The purpose of the system includes debiting tax when it becomes payable and crediting tax paid. So allocating tax paid against tax payable and also other matters. So we move on to the recovery of tax from a taxpayer. So tax as a debt due to government creation, and then it includes tax as a debt due to government creation and extent of charge over assets, taking possession of charged assets, sale of charged assets, release of charged over assets, restraint of person and restraint of others. They explain it. So tax as a debt due to government. Tax is a debt due to government on the date it becomes payable. The Commissioner General may initiate court proceedings to recover tax debts as well as the cost of the suit. So the cost of the suit will be passed. So creation and extent of charge over assets. So the Commissioner General may create a charge over assets owned by taxpayers when they fail to pay tax. When they fail to pay tax, they might what? Create a charge over, like they are coming to take over your asset or stuff. The notice of the charge shall specify the name of the taxpayer, the thing, the asset charge and extent of charge, tax to which asset is charged, the power of the Commissioner General to take possession and sell. The charge has no effect unless, in the case of land and building, the Commissioner General files an application to register with the Chief Registrar of the land. In any other case, notice of the charge is served on the taxpayer. Then we move on to taking possession of charged assets, right? So now they are coming to take over your assets. So a taxpayer shall not, this is what the law is saying. That's why I'm reading them like that to you and adding some small explanation. So the taxpayer shall not deal or purport to deal with a charged asset once the Commissioner General takes possession. So you cannot deal with an asset when they have, like, they've taken possession of it. In the case of tangible assets, physical possession of charged assets. In the case of intangible assets, there will be a public notice. Possession can be exercised directly by the Commissioner General or directly via authorized agents. Reasonable force may be used to enter premises with the assistance of the police. Taxpayers will be given an inventory of assets seized. Sorry. The cost of storing movable assets shall be borne by the taxpayer. So already now you are owing tax and you are not able to pay, and they have come to seize your assets. So the cost of moving the assets and then storing them will be borne by you. So if in case that cost is like 100 cedis, they will add it to the tax that you are owing. The Commissioner General shall release a charged asset if the charge is released via payment or within 60 days if the charged asset is not sold. So for sale of charged asset. So when it comes to sale of charged asset, public notice must be issued before sale. Land and building must be sold within 30 days. Perishable movable assets within 24 hours. So that's what we see. All other assets within 10 days. The power of sale can be directly exercised by the Commissioner General or indirectly by authorized agent or by court order. The proceeds of the sale shall be applied as follows. First, for the cost of the charge and sale of the assets. Second, for the tax due and the interest thereon. Third, any other unpaid tax. And then for remainder to the taxpayer within 90 days. So this is how they are, once they sell the assets, first they are going to charge it for cost of charge, for the cost of the charge and sale of the assets. And the second will be on the tax due and interest on that tax. And third will be any unpaid other tax that you are owing. And then fourth, if there is any remainder there, they give it to you within 90 days. The Commissioner General shall be exempt. The Commissioner General shall be exempt any transaction tax with charged assets, including stamp duty. So, 5, release of charge over asset. A charge to an asset is considered released when the asset is sold or when the taxpayer pays the debt in full, right? So when the asset is sold, there's a release of charge, and when the taxpayer comes to pay his money, then they give the asset back. The Commissioner General must lodge the notice of release in land and building to the Land Commission within 7 days. The Executive Secretary of the Land Commission must remove the entry of the charged assets within 7 days. Then 6. Restraint of person. The Commissioner General may request the Comptroller General of Immigration to prevent a person who fails to pay tax on the due date to leave Ghana, and there is a reasonable cause, there is a reasonable cause to believe the person may leave. If the person wants to leave, the Comptroller General must prevent the person, and the Comptroller General shall refuse the person leaving the country for a period of 7 days from the time the notice is served on him or her. The High Court may extend the time based on an application. The Commissioner General shall withdraw the notice if the person pays the tax. And restraining orders. A restraining order will be issued by the Commissioner General when there is a reasonable ground to believe that tax has not been paid, will not be paid, or a person within 30 days have failed to register for tax after a written warning. The Commissioner General may use reasonable force to distrain goods, distrain and search premises, a place, conveyance, or other assets. Or a restraint notice shall be served on the possessor of the asset or left at the premise if no possessor can be found. So a distraint means seize someone's property in order to obtain payment. Now, recovery from third parties. So if someone is owing you or if an organization is owing, we can recover those money from managers of the entities. They are going to pay receivers, third-party debtors, anyone owing you. Then there might be a compliance with notice and recovery from agent of non-resident. So if you're a non-resident, your agent is going to pay that amount. So let's talk about it here. So managers shall be severally and personally liable for the tax debts of entities. Such a liability is deemed a personal liability of the manager. They are liable if they were present for 6 months before the event that give rise to the tax liability of the entity occurred. Right? So meaning that they are liable if they were present before when the tax liability occurred. But after the 6 months, they are not liable for it. Then receivers. Every receiver must inform the Commissioner General of the appointment within 14 days or on the date he or she takes possession of assets, whichever occurs. So let's say you've received an asset as a will from, let's say, your father, and your father is owing a tax. You have to inform the Commissioner General about the asset that you've received. A receiver shall not distribute assets unless he or she has accounted to the Commissioner General. An executor of a deceased person or legal representation of an incapacitated person shall complete and submit returns once appointed. The Commissioner General within 14 days shall inform him or her of any tax liability of that person. The receiver is personally liable for any unpaid tax if he or she fails to do the above. So, third parties debtors. This is where someone owing you. So the Commissioner General may serve notice on a third party debtor of a taxpayer who fails to pay tax on the due date. A third party debtor shall not pay any amount to the taxpayer once the notice is served, but rather will pay that particular amount to the GRA. The amount payable by the third party debtor becomes his or her personal liability. The following are treated as money owed to taxpayers. So money owed the taxpayer, owed to the taxpayer, money held for the taxpayer, anyone holding money for you, money held for another person to be paid to the taxpayer, money held for another person who has authority to pay it to the taxpayer. Now, compliance with notice. A third-party debt who pays the money to the Commissioner General shall be treated as acting with the authority of the taxpayer and all other persons. Indemnified in respect of the tax payment in all proceedings, civil or criminal, and all processes, judicial or extrajudicial. A third-party debtor who does not have the money to pay the Commissioner General shall write to the Commissioner General stating the reason. If you don't have money, since you've received notice but you're owing the person, you don't have money, you have to write to the Commissioner General stating the reason. The Commissioner General, on receipt of the letter, may cancel or amend his notice or reject the letter. The recovery from agents of non-residents. So the Commissioner General in writing may request a person in possession of an asset of a non-resident taxpayer to pay on his behalf. So if you're an agent of a non-resident and your this thing is owing tax and maybe he has run away or something, you are going to pay on his behalf. The person so served shall be required to pay up the market value of the asset, but not exceeding the tax due. A resident partnership or partner is severally and personally liable for the tax liability of a non-resident partner up to his or her share of the net assets of the partnership. So let's talk about reduction and refund of tax. So limits on tax reduction. All MDAs must obtain permission from the Minister of Finance before granting tax waivers or variation. Reporting on tax reduction. The Commissioner General shall report partly to Minister of Finance all tax reduction granted. The remissions today here. Hey. The Commissioner General may remit tax on grounds of impossibility of collection of tax. A person in writing may request the Commissioner General to remit penalties. The Commissioner General may refrain in whole or part from assessing the penalty, extend the period to pay the penalty, or remit or waive the penalty. Application for tax refund. So you can apply for tax refund. A person within 3 years can apply in writing and containing explanation to the Commissioner General for a refund of tax paid in excess. The Commissioner General shall, within 60 days of receipt, make a decision for the refund. Tax refund shall be applied as follows. Apply the excess in reduction of any outstanding tax liability. Refund the remainder to the person within 90 days. Where the Commissioner General fails to refund it, it will attract an interest of 50% of the statutory rate. So if the Commissioner General fails to refund, right, it will attract, let's say if the statutory rate is, let's say 20%, then it will attract 10% of the statutory rate, right? Because 10% of 20% is 10%. 50% of 20% is 10%. That's why. Then 6% of tax revenue shall be set aside in a GRA general refund account. Now, let's move to interest, penalties, offenses, and procedures. This is the final chapter of this session. This talks about interest, penalties, offenses, and procedures, and we are going to look at them. Let's first look at interest. Interest for underestimating income tax payable. If a self-assessment fails, so when you do the self-assessment and it falls below 90% of the actual tax you are supposed to pay, then interest will be paid on the difference between the estimate at the actual tax at the rediscounted rate. So you see that when they fail to pay you, they only pay 50% of that particular rate, right? But you, when you fail to pay, like when you pay, but maybe you fell below the 90%, like let's say your distance is 80% of the tax, then the difference is going to attract the same amount here, right? But interest for failing to pay tax is 125% of that particular Bank of Ghana rate discounted rate. You see how smart they are. They will pay half. By yours, you are going to pay either the same thing here or 125% of it. You see, so underestimating, you are paying the same thing, but failing to pay, you are paying 125% of it, which will be compounded monthly on the amount outstanding. This is an example here. Wise Limited is a company operating under self-assessment and prepares accounts to 31st December each year. The company estimated its chargeable income for the year 2017 and has 45,500. However, the company's returns, which were submitted to the Ghana Revenue Authority on 5th January 2018, showed a chargeable income of 105. So this is the actual, the self-assessment, right? The chargeable income that they submitted, but this is what the GRA said they were supposed to file. So you can see it is what? It falls below the 90%. So look at it. Now they say we should identify and compute the penalties payable by WISE, assuming the Bank of Ghana policy rate and general corporate tax rate is 25%. So if self-assessment fails below 90% of the actual tax, interest of 125% statutory rates compounded monthly and applied to the difference between 90% of the actual tax and tax paid in installment. So first, we calculate our 25% on the distinct that day. So this is the chargeable income they found on self-assessment. 25% of it is this one, right? Now, we calculate 90% of the actual distinct that the Commissioner General saw. So the actual distinct is this, 105. When you calculate 90% of it, we are going to get 94,500. When we apply 25% on the 94,500, this is it, right? Now, we are going to tax the difference at a penalty of what? 125% of the Bank of Ghana rate. We'll solve more tutorials on this, so don't worry. So now 23,625 minus the actual one that you paid or you filed to pay, right? We get this. Now, since you failed to pay this, you are going to pay 25% on it at like rediscounted monthly, right? So that's why it is 1 plus 25% times 25% here is the corporate tax times 125%, because you feel it is 125%, right? And this is going to be 16,000. So you are going to pay a penalty of 16,078 Ghana cedi as a penalty. Failing to maintain, so penalties again. So failing to maintain documents, 75% of tax attributable to the period if deliberate, lesser of I, or 25. So when it's lesser of I or 250 currency points in any. So basically what it means is that if you fail to bring or file 75% of the tax attributable for the period, you are going to pay 25%, a 250 currency points as your penalty. So one currency point is 1 cedi. So it means you are going to pay what? 250 Ghana cedi, right? So you are going to pay 250 Ghana cedi for this. So one currency point is 1 CD. 1 CD. So you are meaning that you are going to pay 250. Right? That's it here. Now, when you fail to file tax return, then 500 currency points plus, so we solved the question in the previous tutorials where someone failed to file the listing for 12 days, right? So it was 500 plus into bracket 10 times 12, right? So 500 CDs, right? Here is what 500 currency points plus 10 times the 12 each day. So each day is 10, 10, 10, 10. So each day is 10 CDs. Right? So 500 plus it is going to look something like this. 500 plus into bracket 10 times the number of days. If this is 12, in the previous tutorial, it was 12 days. So this is going to be 10, this is 120. So all is going to be 620, right? For 12 days. You get it. All right. So now for communication service there, you are going to be charged at 200, 2,000 currency plus 500 each day. So normal distance 500 plus 10 each day, but communication service charge is going to be 200, 2,000, sorry, 2,000 plus 500 each day. Wow. A person may be prosecuted after 4 months if not paid. So after 4 months, if you haven't paid, then you are going to be prosecuted. Then making false or misleading statement, you are going to so making false or misleading statement of 120% of the tax shortfalls if without reasonable cause. It's 120% of the tax shortfalls if without reasonable cause, and also it's also 30% of the tax shortfalls if any other cause, right? We have reasonable cause and any other cause. And then unauthorized attempt to collect tax. So if you take tax where you have not been authorized to, you are going to pay 100% of the amount collected if made willingly or knowingly or recklessly, any of them. The amount collected in any other case, or the amount will be increased 20%. The amount will be increased 20% per annum if unpaid. Aiding and abetting tax is when you are helping someone to evade tax, right? And you are going to pay 100% of that shortfall. Assessment of interest and penalties. The Commissioner General shall assess the interest and penalties for which a person is liable for each category of tax. Offenses. So when you fail to comply with a law, a tax law, you are going to pay 1,000 to 2,500 penalty units. Remind you, currency unit is different from penalty unit. One penalty unit currently is 12 Ghana cedis, right? It's 12 Ghana cedis. So meaning that if it ranges between 1,000 ways, so 1,000 and 2,500. So you are going to multiply 12 by 1,000 and then you get the penalty units for this one, and also multiply the 12 by 2,500 to get the penalty unit for this one. Or you are going to face 2 to 5 years increasement, or you can even have both, right? So penalty unit is 12, currency unit is 1. Keep this. Penalty unit is 12, currency unit is 1. Penalty unit is 12, currency unit is 1. So failing to register, pay tax payable and 2 times tax payable. Or so when you fail to register, you are going to pay the tax payable, or you are going to pay 2 times the tax payable, or 1,000 penalty units, whichever is higher. Yeah, that's what you are going to pay. Now, failing to pay tax. If tax failed to pay is more than 2,000, 200 to 1,000 penalty units, or 3 months to 1 year of imprisonment, or both. In any other case, 50 to 200 penalty units, or 1 to 3 months imprisonment, or both is being due. So making false or misleading statement, if it leads to underpayment of tax of above 50, you are going to pay a penalty unit of 25 to 200 units, or 3 months to 2 years imprisonment, or both. In any other case, 5 to 50 penalty units, or 1 to 3 months imprisonment, or both. Then impeding tax administration, the higher of 2 times the tax evaded, or 200 penalty units, or 2 to 4 years imprisonment, or both. Offenses by authorized and unauthorized person, 50 to 250 penalty units, or 3 months to 2 years imprisonment, or both. Offenses by entities, the managers become liable unless they took reasonable steps to prevent it. Causing harm to a tax officer, not more than 20 years imprisonment. So you are going to be imprisoned between 0 to 20 years. Compounding offenses, pay both money and lost any charged assets. Now, publication, let's move publication of names of the offenders. So the Commissioner General may publish in Gazette, website, or any national media list of persons who have failed to file tax returns, failed to pay tax on time, been convicted of any offense unless under appeal. Compounding offenses. The publication may specify names and address, offending conduct and period of occurrence, amounts of tax involved, particulars of fine or sentences. I'm in a minute. So, all right, so I've explained this. Now, other provisions, relationship between tax laws. So Act 915 shall be read as one with each of the other tax laws, international arrangements. So in the event where the thing involves international arrangements, and then the international arrangements with Ghana is inconsistent, the provision of the international arrangement shall prevail over the Ghana Act, right? So if in case of international something, international arrangement act will be higher than the Ghana Act. Then tax avoidance arrangement, despite the provisions of Act 915, The Commissioner General may adjust the tax liable of a person in an appropriate way to counteract any tax benefits to that person. Practice note. The Commissioner General may issue practice notes to promote consistency of the interpretation of the provisions of the tax law. Practice notes may be issued for single or multiple tax laws. Practice notes are binding on the Commissioner General till revoked. Practice notes are not binding on persons affected by the tax law. Practice notes may be gazetted, published at the website, or published twice in a national newspaper. Practice notes may be amended or revoked in part or whole. Then the taxpayer TIN system. This involves the Ghana Revenue Authority, the Comptroller and Accountant General Department, the Registrar General Department, the Registrar of Cooperatives, the Land Commission, the Immigration Service, the Passport Office, the driver, the DVLA, right? The courts, the ministries, departments, and agencies, Metropolitan Assembly, Metropolitan, Municipal, and District Assembly, government, subdivision of government and public institution not listed, persons required to withhold tax under Act 896, banks, insurance companies, and other financial institutions, manufacturing companies, any other persons or under any other institution or person required by the regulation. So, tax clearance certificate is prepared. Institution, Ghana Revenue Authority, when there's an importation of goods in commercial quantities, custom clearing and forwarding, application for licenses under the custom. So whenever there's importation, we need tax clearance certificate, right? So it is backed by the Act 2015 Act 891 and Excise Act 2014 Act 897. Lands Commission and then title registration. Land Commission also needs for title registration and then transaction. Then government, ministries, agencies, local government, authority, and other public funded bodies also needs it for contracts, including supply of goods, works, and service, submission of tenders for supply of goods, works, and service. Conventional bodies also needs it for renewal of practicing licenses. So this is where we end today's session. This is a very long session, and I wish you all the best in the upcoming exams. I will make time and then try and upload the other tutorial sessions and then try and then solve, let's say, last year's past question here. So when I'm done, we are done for the semester. Thank you very much for patronizing my videos and see you in the next session. Bye.